Radio Real Estate Show. I'm Cheryl Garlock with Colorado Front Range Properties, your host each and every week on this wonderful show. Gosh, I hope you enjoy listening to this show. And, if you've got questions for myself or my guest ever, we want you to call. We're not shy of phone calls. I'm giving you one easy number. You can remember this one, 321-7600. I made it easy, 321-7600. And, of course, you can always reach me by way of email at Cheryl, Cheryl, at coloradospringsbesthomes.com. So keep that under your hat there as well. Lisa Herandez with Bear Creek Mortgage is in the studio with us today, and we are going to be talking about some changes that we're seeing along the forefront in the mortgage industry. Lisa, welcome to the show again.
Thank you so much, Cheryl.
I'm glad you're here. So let's talk a little bit about what some of these changes are. I had gotten an email from an affiliate here that basically says is that HUD, which is the Department of Housing and Urban Development, and they're pretty important, particularly if you're getting an FHA loan, and a large percentage of people are getting FHA loans, or they're buying a property that either might be owned by HUD or that might have a loan on it that's going to go through a short sale. And they are looking for more transparency in real estate transactions.
Correct.
And I think that's a trend that we're going to see more and more. You guys have already been seeing that for some time now.
We've seen it for a long time now, so
yeah.
About 4 or 5 years.
A lot of disclosures, here. And, one thing I wanted to go ahead and mention here is that they're asking for on the purchase of the pre-foreclosure sales, they're asking for more transparency, more clarity. They actually have come out, I think it starts in October, that if your real estate agent is actually the listing agent on a property that is a HUD pre-foreclosure sale.
Or a short sale.
Short sale, same thing, exactly, good point. Then you cannot work with an agent affiliated in that office at all, let alone that agent, if you want to buy that property.
Exactly, which is a huge deal.
Yeah, it is a huge deal. So, this whole thing on transparency is big, big, big. And the reason it's important is because if HUD is starting this issue, you can rest assured that this might expand to Fannie and Freddie and VA. Would you not think that over time that might happen?
Exactly. So it is a trend that we've been seeing the last 4 years, and it will continue as it keeps going forward.
So let me tell you what this really means to you if you're thinking about buying a property. I get these calls all the time. Well, I'd really like to buy a foreclosure, or I've heard of that thing called a short sale. I want a deal. My gosh, imagine that, right? I want a deal.
Everyone wants a deal.
Everyone wants a deal. So they always think that those are the only and best deals that there are out there. That's not true, by the way. But needless to say, if you're going to say that you really want to look at, particularly in this case, pre-foreclosures or short sale properties, you need to make sure that your agent has the capacity to show you those, even if those properties are listed in their office. And now with this new ruling, let me tell you what that answer is. No, you can't do it. So this makes the argument that you want to start working with a more independent real estate broker. An independent real estate broker with a smaller firm is not likely to be one of those foreclosure specialist agents that handles those on the listing side.
Correct.
They sell them, but they don't list them. Big difference. And that's what HUD is going after, it sounds like to me.
Yes, and that will be effective.
Let's talk about also getting people who have had a history of the foreclosure or the short sale on their credit, and then how our program's changing to maybe help those people buy. I think they can start buying sooner than later.
Yes, actually, that's the positive piece with FHA. They recently came out with a program called the Back to Work program.
Whoa, that's lovely.
And they're trying to help homeowners get in that have had a history and we call it an economic event that has happened and as such has had a history of foreclosure or bankruptcy and has since then recovered. So, and we're looking for a full economic recovery, proof of your income back where it needed to be, because so many people lost their jobs, Cheryl, as we know.
Oh yeah, absolutely, a lot, especially in our turf here, right here. So that is really, really great. Now, what do they describe as an economic event that might have precipitated this?
Definitely a job loss.
Yeah.
Death in the family. That's another.
What about divorce?
Divorce is an economic event. So all those type of various reasons that you would have to go into a foreclosure or a short sale or even a bankruptcy.
So, when you thought basically that it would be impossible for you to qualify, I'm telling you it's not. And that's what Lisa is telling you. And not only that, like I'm closing on a deal today, and the guy's buying, I don't know, about $155,000, $160,000 little property there, and he's getting cash back at closing because his earnest money was $1,500, and he's getting almost $900 back at closing, and he doesn't have a payment due until November 1?
Correct.
Something like that. And so this is really good. This is ideally exactly described as what you'll say, Lisa, that it is cheaper to buy a home than it is to rent a home.
Oh yes, it's definitely cheaper. So rents are so much higher now compared to the way interest rates are, even though they did go up a little bit.
Oh yeah.
But it's still an incredible time to buy.
Absolutely. And you know what that also means? That you, as the home owner now, get to call the shots on what you can and cannot do to the home.
I concur.
And that is so great because as a landlord, sometimes I get the phone calls, can we do this? Can we do that? No. Will you fix this? Will you fix that? Maybe. How urgent is it? You're in the driver's seat when you own the home. It's so much more beneficial to you. Plus, you get the tax write-off. And plus, you get to ride the market as the market goes up. And no question about it, folks. The market is going up. It's going up. We're not going to say that it's going to go up at a super fast pace. And in fact, we don't want it to go up at a super fast pace. But a nice, slow, steady pace. And we can expect to see that happen over the next few years right here in Colorado Springs. And unfortunately, if you wait, which you can wait, no big deal on that, but you're going to pay Uncle Sam and you're going to pay the interest rate on a mortgage a whole lot higher.
And your qualifying is going to be affected by it as well because you can qualify for less if the rates are higher.
Oh yeah, the cost of money is more expensive, so obviously the
Exactly.
ratio or the qualifying figures that you use to figure it out is going to be a little bit tougher, so that's going to be a big impact there. And closing costs can be controlled, don't you think, Lisa? I mean, if you
Completely.
structure your deals
it's all
correctly.
in how you structure the deal.
And I wanted to let everyone know that a lot of times I read an article where people think, they did a survey, and most people think that all lenders are like and they all charge the same rates.
That's not true at all.
That's not to charge the same rates, they charge the same fees. You need to shop around. Therefore, that means you need to call 719-321-7600. I'm going to talk to you about that, and I'm going to put you in touch with Lisa. Or you can visit coloradospringsbesthomes.com, click on the Extras tab, and you'll find her contact information right there. Hey, we'll be right back.